Hey, it's Tax Scripts time from TaxMama.com, and today we start 2013 with news from Spidell Publishing at caltax.com with the latest news on the fiscal cliff legislation. Spidell sent out this summary at midnight, New Year's Day, after a long combative session in the House of Representatives. According to the Los Angeles Times, we almost ended up with no legislation. Here are some of the provisions included in the American Taxpayer Relief Act of 2012, which the President is expected to sign. The tax rates beginning January 1, 2013 are a top tax rate of 39.6%, up from 35%, and that's going to be imposed on individuals making more than $400,000 a year, $425,000 for head of household, or $450,000 for married filing jointly. The 2% Social Security reduction on payroll taxes is gone. They have permanently patched the alternative minimum tax, and I've given you a link to read the details. It's a very disappointing permanent patch. Dividends and capital gains. The maximum rate will rise from 15% to 20% for individuals taxed at the highest tax rates. However, we're going to get the itemized deduction and personal exemption phase-outs back, but they raise the limit. It's going to start for folks with $300,000 on joint returns, $275,000 for head of household, and $250,000 for single. So the marriage penalties are back. The estate tax is going to be a $5 million exemption for gifts and estates. Effectively, $10 million for married couples, but the tax rate went up to 40% from 35%. We do get to keep the $1,000 child tax credit, the enhanced earned income credit, and the enhanced American Opportunity Tax Credit up through 2017. Some other things that are extended through 2013 include the discharge of qualified principal residence exclusion, $250 above-the-line teacher deduction, mortgage insurance premiums treated as residence interest, deduction for state and local taxes, above-the-line tuition for deduction, and the IRA to charity exclusion, plus special provisions allowing for transfers to be made from retirement accounts to charities all the way through January 2013, which will be treated as being made in 2012. Just like last year. There are a bunch of business provisions, but we're not going to cover those here. And remember, you can find answers to all kinds of questions about tax legislation and other tax and business issues free. Where? Where else? At TaxMama.com.